Alright, I wanted to make a video on the low frequency portfolios so I could show you more results. This is the list of 5 systems. I separate Cobra E-mini Russell and Cobra E-mini Russell Short as two different modules or in two different workspaces, but they can count as one system since you won't be trading them both at the same time. So as from a margin perspective, it would just be one strategy between these two. So we got 5 systems, average trade profit for each, the total number of trades, and the total profit. This is before slippage and commission. So if you take a look at the total profit divided by the total number of trades, for everything you get almost $80 profit per trade and about 45 trades per month. If you take out slippage and commission, I usually take out $25. Some people might take out 40, so it depends on where you at, what kind of execution you have. If you take out as much as $40, you still have about half of that profit left. $40 a trade after slippage and commission is really good actually for day trading. So keep in mind these are all day trade strategies, and a lot of times it's very tough to get a strategy that makes more than $50 average profit per trade before slippage and commission, and all of these do average that much. So I want to go through each chart. There's 6. We're going to go through them real quickly here. Take a look at the TradeStation performance summary on each one. Alright, we're in the Viper workspace. This is the performance summary for Viper 3 E-mini Russell, or I'm sorry, Viper 3 E-mini S&P, and you can see 42,000 profit, total net profit since January of '07. The results that I showed you in that spreadsheet were since January 2007. Almost a $3,000 drawdown, average profit per trade of $65. Here is the performance graph, and that is Viper 3. I'm just going to scan through each of these so you can see these really quick on your screen. This is Viper Crude, 44, almost 45,000 total net profit, almost a $3,000 drawdown, $108 average profit per trade, very good average profit per trade. Look at the graph. There's the graph. January of '07. This is the E-mini Crude. It uses a $350 stop loss. You could also trade the big crude, the @CL or the CL symbol, but you would want to double your stop loss since the point value is twice as big. You get more volume on that. The results are about the same, scaled up by a factor of 2 since the point value is 2 times as large. So there is Viper Crude. This is Cobra E-mini Russell. It has a very low percentage of profitability because we take one trade a day at the most, and it uses a $310 stop loss, which is very tight in the E-mini Russell. It has a high average profit per trade, $72. But the reason I like this strategy is because it's counter trend, and so it matches our other strategies well. You get in markets, Viper 3 E-mini S&P is very trend following. And then when you want to, days where it might be more counter trend, Russell has sharp moves. So Cobra here can balance that out, provide some diversity. Here is the equity curve, not the most perfect equity curve, but I like to see this pullback as a positive for a potential run up. And so yeah, it's a counter trend strategy, so it's a little bit different, trades a little bit differently. And then when we look at the short module, let's take a look at the short module. It doesn't trade nearly as frequently. Here are the results on the short module. Here's the performance graph, and maybe 2 or 3 trades a month on the short side. These trade 15-minute charts. Also, the short module has a $500 stop loss, while the long module has a $310 stop loss. So those are the Cobras. This is EVP2 Euro currency. $67 average profit per trade, $20,000 total net profit, $3,200 drawdown. Here's the performance graph making recent equity peaks. So this is a strategy. It has 40% profitability. It trades between 9 and 11 a.m. Eastern time. That's when it takes entries. And if it's not stopped out with its $300 stop loss, it will exit at 2 o'clock Eastern Standard Time. So that is the Euro currency strategy that trades 15-minute charts. Here is gap fill rank, very straight equity curve since June of 2008. So this is a strategy that's in the book. It has a very high average profit per trade, $108, but it does not trade that much. Very accurate, 86% accuracy. Less than a $1,500 drawdown. So if you want to sit back and trade a strategy that has a high accuracy, high average profit per trade, but doesn't trade much, this is a strategy that you can trade individually, and it works great in the portfolio. So that's the summary of the 6 strategies for the low frequency portfolio. You should check it out for October.